Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Gevo Green Energy Stock. I'm going to go over their summary of the company, its product offering, recent crazy news out there, some of the financials, but there's a lot of other forces at play, analyst projections, and give it my buy, hold, or sell recommendation. And folks, you can kind of forget about the fundamentals on this one. Political forces are at play, but I'm going to get in that later. And as always, don't forget to smash that like button down below. And if you like to hear daily stock analysis recommendations, don't forget to subscribe and hit that notification bell. So let's get right into it. So Gevo is engaged in the commercialization of jet fuel, gasoline, and diesel fuel. Let's bring it over here. The company's fermentation yeast biocatalyst produces isobutanol through fermentation of renewable plant biomass. It operates through two segments, the Gevo Incorporated segment and the Gevo Development Agri Energy segment. Gevo segment is responsible for research and development activities related to the production of isobutanol, including the development of the company's biocatalyst, the production and sale of renewable jet and other fuels, the retrofit process, and the generation of chemicals and biofuels. The Gevo Development Agri Energy segment is responsible for the operation of the Leverin facility and the production of ethanol, isobutanol, and related products. Its products include renewable gasoline, renewable biodiesel, iso-octane, sustainable aviation fuel, isobutanol, ethanol, and animal feed. But let's go look into some news right now, what's going on with the company. And be aware, this stock, normal, rationale thinking is kind of out the window. Looking at more of the political, economic, green energy play with the co-founder becoming buddy-buddy with the Joe Biden administration. But I'm going to get into that. So 2 days ago, it filed a follow-up equity offering in the amount of $350 million direct offering, so more dilution of the company, and this is adding 1/3 the number of shares to the current company. So Gevo, which processes renewable crops like corn into conventional fuels like gasoline, said last night that would raise about $350 million by selling 43 million of shares to institutions and accredited investors at $8 a share. And get this, it's currently trading at over 10 right now. So the company plans to use the proceeds to fund capital projects like including the new Net Zero 1 plant in South Dakota, as well as for working capital and general corporate purposes. Additionally, the stock sale will significantly dilute current shareholders, adding to shares outstanding by about a third. Now let's examine Gevo's Net Series news that came out as well. So it's the Net Zero series. It's designed to create energy-dense liquid hydrocarbons that deliver net zero greenhouse gas emissions when burned. Now, Citigroup is assisting Gevo in raising the necessary capital for the Net Zero 1, the company said. This is not a new project, but rather the first of projects that we have been working on with Citigroup to get financed, the CEO, Patrick Gruber, said in the statement. We're naming our future projects Net Zero to make clear that the mission we're on is to reduce the GHG emissions by using carbon from the air as raw material source with its inherent low carbon footprint, sustainable agricultural, a combination of renewable energy obtained from photosynthesis, wind, and biogas. We see that it is possible to transform renewable energy into liquid hydrocarbon fuels that work with combustion engines typical of cars, planes, and trucks, with the added benefit that these fuels have a net zero carbon footprint across the life cycle. But what do I consider the biggest news right now, besides the net zero project or the $350 million stock dilution plan? Gevo's co-founder is joining President Biden's science team. Now, the science team is tasked with marshaling the force of science to drive meaningful progress in the lives of people. The science team will help the Biden-Harris administration confront some of the biggest crises and challenges of our time. So that being said, with the Joe Biden administration and Gevo co-founder working hand in hand, do I think that the administration is going to give the Gevo a serious Biden fist pump? Oh yes, definitely. But let's kind of bring it back to some fundamentals. But in reality, I think these fundamentals have less of an impact going forward on the stock evaluation and what people are thinking right now and the forward-looking projection of this company. So let's bring it back over here. So the company does have a market capitalization currently of about $1.3 billion, and it's currently trading at around $10.28 a share. It actually increased to $10.56 a share. The company's revenues over the past few years have been shaky at best, decreasing from, let me bring it up here, decreasing from 2018 from 32 $2 million to $24 million, and then decreased in 2020 to a whopping $5.7 million projected for 2020. Now, the fourth quarter results have not been posted yet, but about 5.7 million is a significant decline from the 24.49 million in 2020. Revenue is forecasted to grow about 24% per year in 2021 and beyond that. Revenues are projected to be higher in 2021, estimated to be around 6.38 million, and have projected negative 21.98 million in earnings. The company is currently unprofitable and is not forecasted to become profitable over the next 3 years. The projection of profitability put this company at the end of 2024 with a $19.5 million in revenue and only earnings positive $160,000. But that's taking consideration, not the Biden bump. But let's be real. Above the analyst projections right now, they're not taking consideration the potential political connections here. Let me bring it back here. Gevo does have significant cash runway for 3 years based on current, free cash flow. The company has a highly volatile share price over the past 3 months. Shareholders have been substantially diluted in the past year and in the past couple days. They seem to not care that the stock is going up and up and up. So what do the analysts say on this one? The analyst consensus is a moderate buy with a price target of only $8.25, a low target of $5, and a mid-range target of $6.63 a share. The street ratings report is a sell driven by a number of negative factors, which they believe should have a greater impact than any of the strengths and could make it more difficult for the investors to achieve any positive results compared to most of the stocks that they cover. The area that they feel has been the company's primary weakness has been the declining revenues. I mean, significantly declining revenues. The CFRA report also gives Gevo a sell recommendation. The valuation and quality model subcategories are the two largest drivers for Gevo sell recommendation by the CFRA. Valuation includes factors such as the price to earnings, price to the EBITDA, and price to cash flow. Quality includes factors that consider profitability, cash flow generation, operating efficiency, and earnings quality. They rank Gevo an overall score of 82 percentile of all the stocks in the model universe that they reviewed, 1 being best and 100 being worst. Now, you have to take in consideration, these two reports do not take in the macroeconomic and political issues that will have a direct correlation on the future of this company in 2021 and beyond. Let's go over the ownership breakdown. 4.3% are individual insiders. VC PE firms have 5.6%. Institutions have 13.8%, and the general John Q public of me and you, we own 76.2%. Now, we have to note that the Vanguard Group is betting highly on this stock. They have increased their shares to over 8 million in the company. So am I a buy, hold, or sell recommendation on Gevo right now? Well, this is going to be a doozy. Here are my thoughts. First, let's go over the valuation, profitability, growth, and financial strength analysis, and dig deeper into what really is looking for the future projection. So I'm going to do some analysis on what's going on, and then we're going to look into the future projections. Examining the valuation analysis, the price to sales and the price to book ratios are the most appropriate valuation measures. Therefore, Gevo seems highly valued with the highest price to sales ratio in the oil, gas, and consumable fuels industry of 1,484.95 times. However, the price to book ratio is only 8.26 times, the highest in the industry. Let's look at the profitability analysis. Losing money on a gross basis, Gevo has poor profitability characteristics in comparison to the oil, gas, and consumable fuels industry peers. While the operating and net margins are below the medians, its gross margin is among the lowest in the industry. What about its growth analysis? Gevo's grew earnings in the face of decreased revenues over the past 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the oil, gas, consumable fuels industry, where earnings fell over the period. Let's look at the financial strength. They have little financial risk right now. I mean, they just raised $350 million. The liquid assets shown on the balance sheet are more than enough to eradicate its current debt load. But going beyond the fundamentals and the valuation, we have to dig deeper to figure out what is really going on with this stock. Gevo has a history of share dilution as the stock plunged following its 2011 IPO and had been a penny stock for several years while the company relied on dilutive stock sales to raise cash. In the last few months, the stock surged, driven by hopes that the Biden administration policies will benefit the renewable energy companies like Gevo, as well as the prospects for the Net Zero 1 project. Gevo is still essentially a developmental stage company and only generating $5 million in revenue through the first 3 quarters of 2020. And its unique approach to renewable energy makes the company a high-risk but high-reward play. Joe Biden and his colleagues have been very clear about the views towards clean energy and the need to shift away from the burning of fossil fuels. With energy and fuel being such a highly regulated industry, it's important to note that the government is on your side. And for Gevo, that will definitely be the case. As I said earlier, Gevo's co-founder would be joining President Biden's science team. If the technology takes off, the stock should be a long-term winner, but investors should be aware that the business is still unproven. That being said, am I willing to bet against the macroeconomic political pressures? With the Democrats running Washington, D.C. right now, demand for clean energy is likely to rise. Gevo needs to be able to meet that demand. With its co-founder buddy with Joe Biden, am I going to bet against this one? That being said, I am a strong speculative long-term buy on this stock, going against what the fundamentals say, but entering this stock at the right price. The human psychological factor that is currently involved will not bring this back down to what I feel is a fair market valuation is on this one, which should be around $5 per share right now, based upon the new projected analysis of the company, or maybe even below that. Instead, I would target an entry price of around $7 a share and hold for the long term. Yes, it is trading way above that right now at like $10.50 a share right now. But once the news dies down over the next few weeks and the recent 1/3 stock dilution that has just happened sinks into the investors' brains, maybe a reasonable price way above its current fair market value can be obtained. Maybe, we'll see. I'm going to keep this on my watch list. This stock should only be for the risk-tolerant investor who is betting the connection between Biden, the Democrats, green energy are going to bring in the revenue far beyond the current projected amounts. As I showed you before, it shouldn't be profitable for the next 3 to 5 years. Are we going to believe that with the Joe Biden administration that the revenues are just going to go skyrocket this year? We don't know yet. If you based your decision just on the fundamentals, I would have been a strong sell on the stock without taking consideration the political buddy-buddy relationship with the current Joe Biden administration. But what are your thoughts? Are you a speculative bull like me at the moment, waiting to get in at the right price? Or do you feel this will rocket to the moon over the next year? Please leave your comments down below. I would definitely like to know your thoughts on Gevo and its future. There you have it, folks. Now, as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock analysis recommendations. Until the next stock update later today, ciao.